Good afternoon. This is Chris Brecher with the Simpler Stocks free video for the weekend of August 8th, 2016. So you see it's about 49 minutes before the bell. Wanted to get this out before I'm going to get on the live chat and help a lot of people the last half hour to see if there's any unusual option activity that we could jump on for the weekend. So I love to get on and just sort of help the subscribers and myself. Talking it out loud always helps me trade. So what is today all about? It's all about momentum. So you have the ESs today up 18.25. Now, this is the whole key. Anytime that you hear anybody say, oh, the unemployment report can turn around the market, usually the market turns around when it's already formed a top. It is above every moving average. There's extreme bearishness on StockTwits, which is where I measure the sentiment, and it's a recipe for going up. Now, that doesn't mean I was massively long, but I warned a lot of our subscribers not to sit there and just go pedal to the metal short in this case, and was actually been posting long-term ideas for the last 3 days. But to sum up what's going on, at least now with 8 minutes to go, ES is up 18, NASDAQ up 45, just what we thought, the Russell up 19. You're going to find that on a lot of Fridays, the Russell goes up, because it's composed of a lot of healthcare stocks, a lot of stocks that are takeover rumors. So a lot of times you see the Russell outperform on a Friday. Bonds getting whacked, which they should, down 121. Unemployment report was stronger than expected. Puts back on the idea that we might have a rate rise sooner than later. What else does that hurt? Gold. Let me just show you something. When we go to our simpler stocks in the morning, and I do this, I post email alerts. Right here we have a chat room, like I've mentioned, from 9 to 10 in the morning. We have premium videos that are more in-depth than what you're hearing. The reason I'm mentioning it, look at the email alerts today. I put out about 6 charts every morning or late at night and about 6 ideas on charts. Today I put out 20 ideas on charts and unusual option activity. Funny is right here, the unusual option activity, we're about 10 for 10 on our last 10 trades. So just to give you an idea. But the reason I'm showing you this, early morning index charts. And I said in here, what did I say in here? And this is what I want you to see if you can see it closely. I'm going to try to expand it. ES up against resistance on a 195. On a daily, the ES is still above every moving average. That's your first tell in there. Second thing in here, look at what I said about the NQ. NQ still in a strong uptrend. Note the daily is not overbought. Now, on a lot of the learning series we do, we show how to read the moving averages, what the MACD even is, the way I use it, what the ATR trailing stop is. As you see in here, all systems were go for us to go up. There was nothing that looked bad, and I know that sort of counter everybody else on CNBC. I know that Doug Cass, Dan Nathans, the Dennis Gartmans especially are all bearish, even Jeffrey Gunlop, even Bill Gross, but the momentum is to the upside. Next thing I want you to see in here that I find very interesting in here is look what I posted for gold in here. Gold still in a nice uptrend. However, on a 195, some negative divergence creeping in the picture. The other thing to notice in here, which we discussed before this sold off, is look how it was kissing the ATR trailing stop from underneath. This is the first time that it sold off from it and worked off the oversold and stayed under the ATR trailing stop. Now fast forward to about 5 hours later in here. Look what happened to gold today. Better unemployment report. Chance that they'll tighten, and check this out on a 195. Pretty impressive. I'm glad I showed this negative divergence. Now, I don't always show negative divergence. The reason that it was important this time is when you see this kind of pattern, this symmetrical pattern right here of these little peaks on the MACD, and when they're successfully lower, that's a really reliable indicator for negative divergence. Like I said, one of my last priorities usually is negative divergence unless I see those type of cycle peaks that are lower and lower. And sure enough, not only did you have that, you had the break under the ATR trailing stop, and you had it under the and stayed under the ATR trailing stop when it worked off the oversold. It's down $23. That would pay for your subscription for a long time. Now, to get into it, we also have crude oil, only down 7 cents in here. Why is crude only down 7 cents when it looks like they might raise rates? Because the unemployment report was so strong, it gives credence that we have a stronger economy, which can help oil. So that held up. Advanced decline today, actually interesting, only up about 1378. We have the SPX, like I said, a new high, up 1818. Nikkei lagging again. Transport's doing great. And I think this is because people think the economy's stronger than expected. It makes the rail stocks go up, makes the airlines go up, and that's what we got. We got the dollar going up today also. Now, what's very interesting in here, here's the dollar. We've been talking about, that it looked like it was forming some kind of bottom in here. The problem is then you have the sell-off and people say, well, weaker dollar is good for exports. You got to take the market up. Then the dollar goes up and people are like, that's a strong economy. That's good for the market. It's all about momentum, and that's what this entire market's about. It's about momentum, and it's about traders perceiving the best case scenario. On my headline tonight for the video, I'm going to say strong unemployment report caused a surge in the market. What I then say, and I don't mean it cynical, is if the market was down today, I could have had the title. I could have said strong jobs report jolts the market to the downside. It just happens that because sentiment is so extremely negative that every bearish trader is getting caught flat-footed and having to cover like a herd mentality, so to speak. Now, where does that end? You can't tell yet. We're not getting the divergences yet. We don't have anything going down yet, and we're not under any moving averages. So until I see that change, I think you have to be neutral to positive. You don't have to be wildly positive, but I think you have to realize that all these people calling for a crash happens after a top is developed, and we have not had that. So I hope everybody's enjoyed this. I hope you understand we have a $7 30-day trial. We've had thousands of people sign up for that. It's been a great thing for me, very fulfilling to help so many people. And we have one of the highest retention rates in the industry. So have a wonderful weekend. I will talk to you next week.